Have you heard of Aditya Vision? It is one of the best performing stocks in India in the last 5 years. Do you know what they do though? They own stores that sell electronics in Bihar. Sounds crazy, right? That a company that does that kind of work in one of the poorest states in the country can make such returns. But that is where our judgment fails us. We keep looking for green energy plays and defense plays when the best performing stocks, even in the last 20 years, have been boring companies. Think about Asian Paints for a second. It's a very boring business. It just sells paint. Think about Bajaj Finance. It lends money mostly to people whose applications are rejected by private banks. Boring businesses. But boring businesses make money. And sometimes the business might just be downright unlikable. Think about Muthoot Finance. And let me take a quick guess, you don't own that stock. I don't either. Very few people do. Firstly, because they give out loans against jewelry. You don't deal with very happy customers there. Nobody loans out their jewelry during the good times. But that stock has been one of the most consistent compounders in India. Think about Antony Waste Handling. It's literally working with waste. But hey, if we're going to have a clean India, someone will have to do that job. And why do these companies generate insane amount of wealth? Because nobody wants to do these jobs. The competition will always be small. But even if you find the best stock out there, to generate real wealth, you must buy before institutions do. For example, I spoke of Netweb Technologies at around 1400 before everyone and their grandma started buying it. There was limited institutional interest then, the markets were falling, but that's the time to buy. Because when these stocks ignite, they go parabolic. Right now, I have Acume's Drugs as another one of these companies, and another one of those companies is Knowledge Marine Engineering Works. Brilliant company, it has a moat, it was in the SME sector in fact just some time back. These stocks have very little popularity, and that's how we create multi-baggers. By the way, if you're learning something new, please drop a like, it really helps with the algo. Moving on, everyone keeps talking about high growth industries like defense, energy and public infrastructure, and stocks in these sectors can work really well for a period of time. But take a look at all these stocks from all these sectors over a longer period of time and you will see that they usually just move around in cycles. Look at BHALE for example. This is not the first time it has made investors dream of the big things to come. It will not be the first time that those dreams are crushed either. I would not buy BHALE at a 10% discount today. I would buy Delta Corp though. The industry seems to be dying, but I know it will survive. Gambling existed before the Constitution was written and it will exist long after you and I kick the bucket. So if I'm getting a Delta Corp during its worst period in history when the industry is not growing, I would be a very happy buyer. Now this one is fairly obvious and I'm sure that you use Screener to check promoter ownership in any company you buy. You do, right? One such company has been JSW Steel. Continuously rising stakes are always a good sign, but to be honest, in this current market, I haven't found a single stock that I would buy simply based on this metric. Now when the times do change, insider buying might make me buy into some companies and it might be one of the first signs of which companies will do well. And the next one is stock buybacks, and this one is very controversial. See, generally stock buybacks will inflate prices, at least temporarily, but not for the reason you might think. See, most think that the safety net of a buyback, which is where the company buys its stock from you, allows investors to hold, so we reduce the selling pressure in general, and that's why stock's price climb. But that's not it. A stock buyback in reality reduces the free float of a company, which is the number of shares in circulation. And because the number of shares fall, the EPS increases. The earnings per share is calculated based on the free float. So if a company makes the same profit for 10 years but buys back half of its stock, its EPS will double overnight, which means the stock will look very cheap and hence the stock price would rise because the market would price it according to its old price to earnings. There is a much darker side to this though that I will not talk about in this video, but simply from a price standpoint, consistent stock buybacks will generally make you awesome returns. And those are the 6 things that make for multi-baggers over decades. I'll see you next time.